This is our Forex blog for July 19th, 2011. We're not going to have another blog posting until I get back the following Wednesday, the 27th, will be the next video blog. How we start each day is we try to find the weakest ones to sell against the strongest and find the strongest to buy against the weakest. Without any doubt whatsoever, you can see the New Zealand daily, weekly, monthly trend at the bottom. Color strips are extremely strong, and the real-time trend was strong. So every time all the time frames line up, it's usually a pretty easy trading day in that pair, and you can usually expect to make 30 to 50 pips. The weakest one is the dollar. At 3 it became the weakest, and the daily, weekly, monthly trend is the only one where all time frames are down. So basically you want to buy the strong New Zealand versus a dollar. And typically you're going to, the markets can chop around and slowly go up and slowly go down, but this is kind of the type of trade where you want to hang on usually for 50 plus pips. You can see the price was above the hourly, which is one of our filters, and it's going up with moderate strength, pulls back, finds support at the hourly moving average, and then it just stays long. If you use our IntelliStop, it kept you in until right here, got you in again here for another 15 pips, got you in again here for another 20 or so pips, and went right to my Fibonacci profit target level. On trend days like this, and I don't show this in class that often, but I will right now, you can also use something called the 3-line break to keep you into these trades a long time. It went long right here, and then out right here. You can see the red. Went long again. Let's zoom in a little bit here. Went long again right here, and it actually still has you in the trade. It would have to close underneath, we'd have to have a closing bar underneath 85.50 to get you out. So if it goes sideways for another 2 hours, it's still long. Shoots up another 30 pips, you would still be in it. So the 3-line break is on days like this where there's no choppiness. One pair is without a doubt the strongest of all the pairs, and the other is, the weakest on all time frames. Real time, the daily, weekly, monthly, you can use our 3-line break tool as a way of getting into this trade. Notice it pretty much went long almost on the exact same spot our IntelliStops went long, so you had added confirmation there. And the fact that it came down to a support level like the hourly moving average, found support, there were buyers there like there normally is if a trend's going to continue. Pretty much the most no-brainer trade you may have seen in our blogs for weeks. This is just a picture perfect trade. If these things came along like this every day, we'd all have our own private yachts and jets. I mean, this is a rare trade, but when you spot it, you should probably double or triple your lots, and it's just one of those easy trades. Now, the yen also started to get weak here at 3. Unfortunately, its weekly and monthly trend are slightly up, but when one pair is as strong as the New Zealand, you can buy it against most of the other ones. It was probably the #1 strongest one all day. And so you can see on this chart also it's above the hourly right here, and our IntelliStop got you in, out with maybe 40 pips, pulled back here, small loss, back in again, and you can also use the 3-line break. Even though the yen, the longer term trend was not down like the dollar, you can also use it to time the injuries. In, or hold on a second, let's zoom in on this so we can see. In right here, out, in, loss, in, and out right here. So this last trade we're in right here at 29, out at 56. The biggest loss was in right here at 24. And technically, once it goes underneath this level here, it's likely to be a red 3-line bar. So as soon as it goes underneath this area right here, you can get out a little bit smaller. If it looks like the momentum is going to push it down even more, you might as well just get out right here at 12. So that would be about a 12 pip stop. Or if you waited for the bar to close like you're supposed to, it would have been a 24 pip loss. But you can see, just this one win, 81 to 23, it's a 40 pip win. You made money using that as well on the New Zealand yen. Another pair that was extremely weak for most of the night, unfortunately the monthly trend was up, is the Swiss. Let's take a look at the New Zealand Swiss. These trailing stops aren't going to be the same because a lot of our code in the IntelliStop is meant to only work live, but it still gives you an idea of where it would have you in and out. Notice what this has in common with all the other trades. hourly moving average, price is above it. Found support at the hourly. And when it broke out above the 10-day moving average right here, this thing took off. This would have been a pretty high probability trade right here at 31, or 23, sorry. And then you're out up here at, let me see, how many pips was that? About 50 pips. You know, pulls back, long again, small loss, long again, small win, you know. When it gets above the upper containment band, you can also use, you know, fib targets as an idea of where to get out of these trades. Notice pretty much to the pip, the 1.618. This is usually the maximum move it's going to have, especially when it's above the upper containment band. Let's look at something other than the New Zealand. The dollar was extremely weak today, so you know, when the dollar or the euro started to have some strength, that would have been a good trade as well. Those who traded the euro, this was above the hourly, and then we had a narrow range breakdown right here. You might have gone short, had a small, let's see here, 4,100 to 83. You know, you made about 15 pips there. When it went back above the hourly, you go long, got you out right here. The trailing stop got hit again, and then it got you out right here. Notice Fibonacci areas outside of the bands typically are the end of the move. And another good trade after a market has gone too far is wait for a two-wave pullback. So on the first pullback like this, draw your fibs, and usually between the first and second fib target, and always helps when the hourly, you can see the hourly moving average has worked its way up there. It's also support right here. As soon as it goes above those bars high, you're long right here at 41.52, and you can see the trailing stop got you out right here at 90. Very, very good 40 pip trade on that. You know, waiting, usually when a market's gone too much, it needs some time to let all the, you know, the weak holders out, you know, the people that are not longer term traders, let them sell up here, and that causes it to not go up. Pulls back. When it finds support and starts to go back up, you get in. If it comes down and doesn't find support, you don't get in. You know, if it breaks the 1.618 or the hourly, you know, that's not supposed to happen. You can also use our real-time tools. On the way down right here, you can see it was pretty weak. This bar right here was, you know, basically had no statistical strength or weakness. And so once you're in this trade, it had some slight strength, increasing strength, you know, and that's why it kept you into this trade, you know. IntelliStop is a very intelligent tool. Let's look at the FX IntelliStop for tick charts. Now this has ultra fast trailing stop, but you can see it's very accurate. If you wanted to short this area here, notice it got you out right here at the end of the move of that particular wave. Let's look at the explosive move up earlier today, I think around 3 or so. Yeah, so it broke out above the hourly and kind of went sideways here and took off. This is one of those tools that is in a beta stage right now because quite often it does have too wide or too tight of a stop. Any sign of the euro pairs losing their strength or dollar pairs losing their weakness, it yanks the stop up and gets you out too soon. This is one of those things where I'm going to use our FX Power Index. We went over this yesterday in our regular class with the 3-period moving average shifted 3 to the right, the percentage of currencies above or below that, and you know, when 80 or 90% of euro dollar pairs are strong and dollar pairs are weak, I'm not going to time the stop so much. You know, it might keep the stop kind of right here and got out, get back in again here. Unfortunately, that one didn't work in here, and it probably would have got out somewhere up here at 85 versus, you know, some of these whipsaws on these super strong moves. All right, that's it for our video blog.